So guys, I just clicked on the recording button now. So we will be taking up AFM classes over a duration of approximately 230 to 240 hours. Last time it was 230 hours, but obviously this time it might be a little more because every time there are new question papers we will have to solve, include all of those questions also. Everything that is given in RTPs, everything that is given in mock test papers or the examination questions or the BOS portal or study material will be included in your materials. So mock test papers till the current attempt, that is September 2024, are already included. Examination papers till May 2024 are already included. November 2024, I will give you a separate sheet later. I did not incorporate that in the material yet. All the RTPs till November 2024 and then this latest study material including the MCQs that were rolled out. You will be given 2 modules as such, guys. The chapters are segregated into 2 modules and plus there will be another material given for MCQs. MCQs are not different at CA final level. The same questions that are given as descriptive questions are being converted into MCQs. In fact, it is easier to answer the MCQ questions because you already have 4 options available in front of you. You will know whether your answer is correct or incorrect. The MCQs that were given in November 2024 attempt as such beta were dead easy. Majority of the students are confident that they will score 28 or 30 on 30 in those MCQs. AFM paper is generally not complicated. The paper is pretty simple. Of course, because we end up doing about 700-800 questions over the entire duration of the course, the key here is retention. If you're able to revise, if you're able to practice all the questions twice or thrice, then there is no way that you should be scoring less marks in the examination. Problem comes only with revision, guys. We all prepare everything before the examination. One day before the examination, if you do not revise the entire content properly, then we face issues in the examination. We are not able to recollect things at the right time. So इसीलिए बेटा ensure that you practice questions on your own in the class instead of merely copying the solutions. I do not believe in you coming all the way till here in the morning, copy and go back. उससे अच्छा बेटा बैच के एंड में I will take xerox of some students notes, convert that into a PDF and share it with you guys if you want to do that. I did that in the last batch also. That will be useful in case you miss 1 class or 2 classes to finish your notes, guys, but that is not to be done as such beta for your regular preparation. Ensure that you're practicing questions on your own. Are we clear? Yes. Now a lot of you have started with your FR classes and you're still in the process of doing it and you might do it till the end of next year also. At least this subject better please finish it on time. Yes or no, guys? Many of you started FR, right? I know, guys, this is the most common thing for CA final students. We start off with FR. In the first year we do 10 classes, in the next year we do 10 classes, we ask for 10 extensions from the lecturer, and then finally we finish the classes before the examination. So AFM beta most likely Feb mid tak ho jayega. We'll be able to finish the entire syllabus by Feb mid if we go as per the schedule, because I will be taking about 82-83 sessions. Depends on the flow of the class. Usually it is around that. Now if possible we might extend the timings as such, guys, by 5 minutes or 10 minutes, not more than that as such, but on a daily basis. I have other classes also, so it is not like I'll take till 10:30, 11 o'clock. Sundays there are no classes better unless required, and that unless required never happened in the last 1-2 years. Just in case needed, we'll see towards the end that if required I might take 1 Sunday or 2 Sunday classes. Otherwise usually you will not have any classes on Sundays. Public holidays and all, you will still have classes. We are not in school. कि गुरु नानक जयंती आ रही है सर फ्राइडे को, do you have any plans of celebrating? I do not have any plans of celebrating. Even if I'm celebrating, guys, in the morning you can come here, attend classes and then go back home and celebrate properly. Are we clear? Now talking about the syllabus, guys, examination paper pattern. The same examination paper pattern beta that you had in CA intermediate. Now most of you were under the old scheme or new scheme? Old scheme. November 2023 and पहले कितने लोग लिखे बेटा यहाँ पे? How many of you have written your examinations in the old scheme? So how many of you have written in May 2024? All right, guys. So many of you have your attempts in the year 2027. 26 नहीं बेटा, पीछे बच्चे भी है विधि, तो अकेली senior citizen नहीं है यहाँ पे. So your examination paper pattern beta here, as you're aware, अब इसकी पेंसिल भी अभी जानी थी यार. So we have 30 marks of MCQs guys and we have 70 marks of descriptive pattern. Those 30 marks of MCQs, as I already told you, Asad Beta, would be nothing but practical questions. Very rarely, Asad Beta, they might give 1 or 2 theory MCQs, but usually it is practical. One single question will be given for 10 marks, Asad Beta. There will be 5 MCQs to be answered under that. 70 marks would be descriptive. That is subjective part. Each question carries 14 marks. This 14 marks will be segregated again. You will have an 8 marker or a 6 marker. You may have 5 marker, 5 marker and 4 marker. Just at this time they gave 5 marker, 5 marker and 4 marker. Every question will be different. There will be question 1 to question 6. You're supposed to answer 5 questions. Question 1 is compulsory. From the remaining questions, you will have to answer any 4 questions. This is the examination pattern, just like your CA intermediate. There is absolutely no change. CA final syllabus is majorly about valuation and risk management. The name of the paper is Advanced Financial Management, but then majorly it is all about valuation. How are you going to value an equity share? How are you going to value a debenture? How are you going to value an entire business? How are we going to value a derivative product? How are we going to manage our risk when it comes to foreign exchange or other parts? This is what is your CA final syllabus about. CA inter का syllabus क्या था बेटा? Are we all aware of our CA intermediate syllabus? Oh my god. A couple of them wrote their exams in May 2024. What is the syllabus that are covered in your CA intermediate? No idea. Huh? Capital budgeting. Directly starting with capital budgeting. One thing I need a support here. Huh. Yes guys, what was your guys? हाँ कोई मारूंगा नहीं बेटा first day. I generally start hitting students from the second day. हाँ. Capital. We started off with capital budgeting directly in CA intermediate. Let's start बोल के घड़ी में ही पढ़ाया. हाँ. Yes बेटा. Time value of money. There was no topic called time value of money, but then yes, we always start with time value of money. Whether you like it or not guys, even in CA final, I will have to start with time value of money. I have no other option for the first 2-3 days. We will only be doing the basics of time value of money. A majority of you already know all of these concepts, but then once you do this better, the next 30 classes becomes very, very easy. It is only the nomenclature, terminology that will change in every chapter. The underlying concept will still be the same. So that is why time value of money Asad beta is very, very important. So your CA intermediate syllabus beta was, abhi bhi nahi aa raha hai. We had financing decisions guys, under which we had cost of capital, we had leverages, we had capital structure theories. There was a theory chapter also, sources of finance. Yes, all of these chapters were only about what are the areas from which you're supposed to raise your capital. Should you be raising your capital in the form of equity? Should you be raising your capital in the form of debt? Should you be raising your capital in the form of preference? Or should you be depending on your international instruments? But the objective here beta was to ensure that we minimize our cost of capital. Select whatever proportion of debt, equity, preference that you would want to do with an intention of reducing the overall cost of capital. That was the ultimate goal Asad beta in these chapters. How are we supposed to compute cost of capital? We will have to revise that also better, because in 1 or 2 chapters there will be references to cost of capital. After that Asad beta, after sources of funds Asad guys, we moved on to application. Application is nothing but your investment decisions. In investment decisions guys, what are all the topics that we did? एक chapter का नाम तो sir investment decisions ही था. That is nothing but your capital budgeting. Anything else? We know the names of the chapters sir, but we do not know under which category it comes. Working capital management, isn't that also about application of funds? Yes, application beta is how are you going to utilize your funds. Capital budgeting deals with your fixed assets, long-term assets, and then beta your working capital management deals with your day-to-day requirement. Doesn't matter whether it is investment decisions or working capital management, it still deals with what beta? Application of funds only. Iske alawa, was there anything else? Distribution of funds. There was only one topic under this beta, that is dividend decisions. Your CA intermediate financial management syllabus concentrated mainly on the definition of the word financial management and all the topics under that. That is why you had sources of funds, you had application of funds, and you had distribution of funds. All the topics were segregated under this only. Of course, iske alawa there was ratio analysis also, guys, but that was to evaluate, to measure expected performance, as well as to perform a post-mortem analysis to measure whether we have actually made that return or not better in the project. That was a separate topic. So this is what is your CA intermediate syllabus all about. CA final syllabus, as I already told you, is all about valuation and risk management. It's very, very simple, very, very easy if you understand time value of money properly. So ensure that you concentrate properly in the classes. Do not have any other thoughts going on in your mind while you pretend that you are staring at me. It's very evident as such, guys, when I look at your faces, whether you're actually listening or you're thinking about something else only. Now, when it comes to valuation, guys, why do you think valuation is important? Why is valuation important? No idea, sir. See, guys, after doing this paper, it is not like we are going to become some stock market experts as such, guys, and we will know for sure what should be the right price to be paid for any stock. That is all a skill, that is an art as such, beta, that you learn with experience. अब जैसे कल की बात है बेटा, someone texted me that there is an unlisted entity available. Do you want to pick up shares? The company will list their shares as such, beta, in a span of 1-2 years. It's into renewable business, solar energy. So the listing is expected most likely in the next 1-2 years. They are telling us that the expected gain would be about 100% on listing if you pick up the shares now. Now that is a riskier factor. As long as the markets continue at the existing level, the optimism in the market continues in the renewable sector, you will see that listing gain of 100%. Just in case something goes wrong or the company delays the IPO process, won't your funds get blocked? So यहाँ पे बेटा taking a call whether to invest or not is also about valuation. Yes or no? Whenever you're buying anything as such, guys, you are talking about the value of the product. See, forget buying a stock, forget buying a debenture, forget buying a real estate property, guys. Even if you're buying a book, won't you consider whether the price that you're paying as such, guys, justifies the value that you're receiving out of it or not? If there are 2 books in front of you, one is available for 50 rupees, one is available for 150 rupees as such, beta, won't you at least have that thought in mind? Is it worth paying 150 rupees or not for that extra book, for whatever looks, for whatever aesthetics that it has? क्योंकि काम तो वही करने वाले बेटा दोनों. It is not that once you write on that 150 rupees notebook, the handwriting will become better. Yes or no? So everywhere, wherever you're going to buy a product, you talk about valuation. Valuation cannot be considered as science. Valuation is considered as an art. Why is valuation? ये देखो नमस्ते बोल रहा है क्लास में. Asgar, हाँ. So why is Asgar तू बोल बेटा? Why is valuation considered as? So for the ones who are attending my classes for the very first time, beta, there are a lot of students here who've been with me since foundation. So they know me since foundation as such, beta. That is why they behave like this in the class. So Asgar, why is valuation considered as an art and not as a science? Guys, we have discussed all of this in CA Inter also. Nimit, you want to answer? So guys, if I were to value any security, if Nandini here is valuing any security, if Padma is valuing any security as such, guys, there's no compulsion that all of them should arrive at the same answer. The value that I'm placing on any security, the value that she's placing on any security, guys, can be totally different. I might think today that Tata Motors is undervalued at a price of 780 rupees. Okay, a couple of days back it was at 1130 rupees. It has gradually decreased as such, guys. It has come down to levels of 780 rupees. Nandini here might think that 780 is also overvalued, considering the fact that they're losing out on their market share heavily in the Indian segment. There are no new models that are expected. The existing models are not doing that great. So the sales of Tata Motors in the Indian continent should only keep reducing only, unless they come up with better versions of their vehicles. JLR, Jaguar Land Rover, is also not doing that great as such, but the sales of that for the first time again have reduced in the current year by almost 4-5%. So don't you think, beta, these are just opinions that we are having about different values? Yes or no? That cannot happen in the examination, guys. In the examination, you cannot say valuation is an art. I can get a different answer. You can get a different answer. In the exam, we use certain formulas to arrive at value. That is why we are supposed to arrive at the same answer. Practically, valuation doesn't work like that. It's not about using a formula, guys, and arriving at the value of the security. There is no certainty in anything when it comes to valuation. Question में देने के लिए he will give us very clearly better that dividends expected in the next 5 years are 10 rupees, 15 rupees, 20 rupees, 25 rupees. Compute present value. In real life, can you be so certain about the cash flows that are being generated? Yes, beta Rachit, correct. Valuation is subjective. So, in reality, beta, can you be so sure about the cash flows that are generated? Can you be 100% sure regarding the amount of cash flow that Tata Motors will generate in the next year or uske next year, guys? There is no certainty that is there in any business for that matter as such, beta. If you want certainty, then you will not have to conduct a business at all. Because there is so much of uncertainty that lies. Guys, agar certainty rehta, then stock market should not move up and down every day. The fact that every day, beta, there is an upward movement, there is a downward movement in stock markets, the reason is that there is too much of uncertainty. One day we are very optimistic, one day we become pessimistic about the markets. One day we think that 30,000 Nifty is also achievable in the very next year. One day we think that it should come down to 19,000. This is heavily overvalued. So the market sentiment keeps changing. Your view of the future keeps changing every single day. That is why we say that valuation is all an art. If there are 30 different analysts covering a stock, there are different analysts in the markets that cover a stock and give their recommendations. Should you buy a stock? Should you sell a stock? Should you hold a stock? Guys, if I show you the report of any stock, they'll say that out of 30 people, 25 say that you should sell, 5 say you should buy. Aren't there people in the market also who have different opinions? So that is why we say that valuation is always considered as an art. It is not considered as a science. There is uncertainty. Uncertainty regarding the amount of profits that you're going to generate. Uncertainty regarding the returns that are required to be generated. Are we clear? So to value anything, guys, what is that we need? Markets ka chhod do, practical. Forget practical aspect as such, but a fundamental. Let us talk about academics. This is actually, guys, fundamental technique also. Over a longer period, value of any security will be based on something called as discounted cash flow technique. It doesn't matter, guys, which business are we valuing, which security are we valuing as such, guys. Over a longer period, any business practically will always be based on the present value of future expected cash flows. How much is this business going to generate on a later date? Uska present value kitna hai? That is what is the value that you're going to pay for any security. If I tell you that I'm giving you a piece of paper, against that piece of paper you will get 100 rupees after a year. How much will you pay me to buy that paper from me? Will you give me the entire 100 rupees today? If you're giving me 100 rupees today, beta, are you not losing out on the time value component? Correct, Niharika? You will be losing out on the time value component if you give me the entire 100 rupees today. What will you do then? Give me the discounted value of that. Guys, even if you take a bill to a banker, guys, if a bill is having a value of 10,000, bill receivable, and you are going to realize the money after 3 months. So, will the banker give you the entire 10,000 rupees? Or will he give you the discounted value of that better? Everyone should make money on the amount of investments that they're making. In case I decide to invest in this unlisted entity as such, guys, shouldn't I expect some return from this entity? Yes or no? If a normal security like Reliance Industries and this unlisted entity are expected to give me the same return, where should I think I should invest my money? Why Reliance? I can exit whenever I want. From this unlisted stock, but I will not be able to exit whenever I want. I will have to block my investment. So whenever you talk about valuation, guys, there is only one fundamental technique that is used everywhere, and that is discounted cash flow technique, which is simply the present value of future cash flows. Our entire first few chapters, but we have debt valuation, we have equity valuation, business valuation, derivative valuation. All of them are based on only this technique, present value of future cash flows. In every single topic, we are going to estimate what are the cash flows that we are going to generate and then arrive at the present value. Only easier part here, beta, is that cash flows will be given in the question. Real life, it is not that simple. Cash flows are not given. It is all based on our estimates that we arrive at the likely cash flow that a business will generate. So To arrive at the value, as I said, we use discounted cash flow technique. For discounted cash flow technique, there are two variables that are involved. I need cash flows, I need discounting rate, something called as your required rate of return. Let us talk about the cash flow part later. Let us concentrate only on required rate of return for the time being. We'll be doing only that as better over the next couple of hours. So when you say required rate of return, guys, what do you understand by it? Cost of capital. Risk-free return. Should risk-free return be your required rate of return? नाम क्या बेटा तेरा? हाँ, हर्षित. अरे हाँ, चेहरा बदल गया बेटा तेरा. So he says risk-free return. Huh. Will you expect risk-free return? Say if I give you this unlisted security ka option beta, if you will be able to. So anyways, a group of people are wanting to come together to invest in this unlisted entity because the ticket size is way too high. So if I give you an option ki you also can invest about 5 lakh rupees in this unlisted entity, expected return is 6%. Will you invest? Why are you laughing beta? 6% is very less. How much do you want? 600? See guys, you do not expect risk-free return from every security. You are undertaking some risk. The return that you would want to generate as such beta would obviously depend on the risk that you are undertaking. Higher the amount of risk that you undertake, higher should be the return. Lesser the risk, lesser should be the return. If you and me start playing poker here, what if I tell you, bhaad mein gaya padai beta, let us play a match of poker first. पत्ते खेलते बेटा, 3 पत्ती for those who do not know what is poker. So if we play 3 पत्ती as such beta, and I tell you that you can make a return of 1% if you win. Otherwise, you will have to lose out the entire principal that you are investing. Will you be interested in playing? Not that I know how to play, guys. I'm just giving you an example. You have a higher chance of winning if I play. ठंडी लग रही है क्लास में, बोलो बेटा. ही करते मत बैठो. समझ में आ रहा है? So in case guys you are playing poker, will you be expecting a return like 1%? If I give you an option that you're betting 100 rupees for example beta, you either lose the entire 100 rupees or you get 1 rupee more than that and you will get 101 rupee. Will you be betting? Will you play that poker match? Ankit, huh? What if I give you an option better that if you bet on a cricket match, you can bet 100 rupees. If India wins, you will get 105 in return. That is including a return of 5 rupees. Or you lose the entire 100 rupees. Will you be interested? The risk is way too high. What if I tell you that if you bet on India's team as such better, by betting 100 rupees, you either get 200 rupees or you lose out the entire 100 rupees. Will you be interested now? Gambling is not good, better. You should not be interested. Yes, But anyways, guys, if there is a higher return that is expected, obviously there is greed also coming in. What is the greed here? We are likely to generate a higher return and that is why beta we will not mind taking that risk. Jैसे there was a stock as such beta, कभी बताऊंगा आगे अभी. It's an SME stock. It was trading at about 13 rupees couple of months back. The current market value is 100 rupees. Now someone called me and said, enter करना है तो कर ले अभी भी. This is likely to touch 200 rupees by the end of next year. See guys, all of these I will never want you to do it because majority of them are stock rigging. There's some operator sitting there but and artificially inflating or decreasing the prices. So I'm just trying to tell you beta, whoever invested in this stock as such beta knows for sure that the risk is very high. If I'm investing at 100 rupees now as such beta, it is only because I'm seeing at a likely return of 100%. If 100 rupees becomes 200 rupees in a span of 1 year, guys, isn't that a good return? You're doubling your money better in a span of only 1 year, just like Lakshmi Chit Fund. We do not know what is Lakshmi Chit Fund. Very good, better. You will not understand these references. But anyways, guys. But here I also know better that this 100 rupees as such, guys, can totally decrease in value. What if the stock comes down to a price of 50 rupees? What if the stock comes down to a price of 30 rupees as such, guys? Possible or not? This company ki total market value is only 150 crores. It is such a small company as such better that the total market value of the entity itself is 150 crore rupees. Don't you think the risk element will be way too high here? समझ में आ रहा है क्या बोल रहा हूँ? There can be days better when you want to sell the stock, there is no buyer sitting on the other side. If you want to sell something, there should also be a buyer. If you're buying something, there should also be a seller. If you're buying something on a stock market as such better, you're buying it from someone else. If I'm buying the share of HDFC Bank today, do you think I'll go to HDFC Bank there and say, एक share निकाल के देना भैया? I'm buying it through the stock exchange. If I'm buying it through the stock exchange, guys, there is someone else sitting on the other side who's interested in selling it. That means someone else has a different opinion. Someone who's selling it better is expecting that the market can decrease. Someone who's buying is expecting that the markets can increase. But coming back to the concept of required rate of return, the return that you are expecting from any security as such beta will undoubtedly be based on the risk that you are taking. How do we measure that risk is also subjective. For this, there are two components. As someone said, beta, risk-free return. It is not just risk-free return. It is also the premium that you are supposed to get over and above this risk-free return. Higher the amount of risk that you are taking, higher will be the risk premium. Lesser the amount of risk that you take, lesser should be the risk premium. You say, just as an idea, beta, if I'm investing in an unlisted entity, I will not be expecting anything less than 30% CAGR. That is my rough calculation. If I'm expecting in a large cap stock, I will be expecting a return of 20%. Otherwise, it does not make sense as such beta for you to invest your money. You are taking some risk. Obviously, you should be remunerated for that risk. Now, talking about risk-free return. What do you understand by risk-free return? ये सब सब्जेक्ट का ही पार्ट है बेटा, हवा में बात नहीं कर रहा हूँ. This is all important for our syllabus. So what do you understand by risk-free return? Yes, हाथ उठाने की जरूरत नहीं है बेटा, कोई नर्सरी में नहीं हो. टीचर सर कैन आई आंसर बोल के बोल बेटा. Why is government rate of return considered as risk-free return? There is certainty that you will realize the money. Government cannot default, right? In any economy as such beta, usually it is the government rate that is considered to be risk-free rate. Though there have been instances in certain economies where private companies ke returns were less than government rate also, because the government was on the verge of bankruptcy. Let's say you talk about Sri Lanka as such, guys. What happened last year? They were going through a very bad phase as such, guys. It was likely that the government itself is going to default. The government might not be able to pay. In fact, they openly said that we do not have money. We are printing notes to pay salaries. That is not the solution. You cannot print notes to pay salaries. If you do that, you are increasing inflation. You are increasing inflation that is prevailing in the economy. Solution is not printing notes and circulating them in the market, guys. But usually, government is not expected to default. Because government is not expected to default, whatever is the return that you get on government securities is considered to be a risk-free security, risk-free return. Now, what is the risk-free return prevailing in the country beta as of now? In our country, depends on the maturity. 6.5% for a short-term security as such, but it goes up till 7%. That is the return that you will. That is the return as such beta that you will be expecting from a government security. 1 second. A 3 months government security as such beta is fetching a return of 6.63%. ये August का है. But a 10-year government security as such beta is fetching a return of 6.86%. ये दिख रहा है बेटा क्या बता रहा हूँ? On an average, a 3 months government security is 6.63%. A 10-year government security beta is fetching a return of 6.86%. The gap between 10-year security and this beta 3 months has reduced. Why is that? I will talk about that also few minutes later. But abhi ke liye, this return is considered to be a risk-free return. How does the government decide what is the return to be offered? बेटा फाउंडेशन में भी सेम चीज पढ़ाया, सीए इंटर में भी सेम चीज पढ़ाया. वी आर कमिंग टू सीए फाइनल. यू हैव रिवाइज्ड इट ट्वाइस. थोड़ा तो बोलो ना यार. Did you not do all of this in CA foundation, time value of money also? Oh sir. Say we are growing at 7%. Better next. Agar we are growing at 1%, risk-free rate 1%. If you are growing at 2%, this is how economists should be working. Life simple hai. Darshan bhau, हाँ. Understood. Bas. Inflation. Yes, beta. Excellent. the prima facie factor as such that decides the short-term interest rates is the inflation that is prevailing in the economy. Higher the amount of inflation, higher will be the rate to be offered. Lesser the amount of inflation, lesser should be the rate to be offered. If the inflation prevailing in the economy beta is 6% and you are generating 3% as an example, are you losing out in terms of your purchasing power? Imagine that you would wanted to buy some product beta today. You could have purchased 1 kg of that product at a price of 1000 rupees. You deposited this 1000 rupees in a bank, you are getting a return of 3%, so you end up getting 1030. But because the inflation is 6%, next year this product is going to cost you 1060 rupees. This is what beta your inflation. Today you could have purchased the product at a price of 1000. Next year you will be able to buy the product at 1060 rupees. Now, will you be able to buy 1 kg of product in the next year? How much is the money that you have beta with you? 1030 rupees. With 1030 rupees, there is no way beta that we buy a quantity of 1 kg. So whenever there is an inflation, higher inflation, government has to ensure better that they provide a return at least more than the inflation, so that people maintain their standard of living, purchasing power. If you were generating 6% as such beta, you will have an amount of 1060. If you have an amount of 1060, won't you be able to buy 1 kg in the next year as well? If you are generating a little higher amount, well and good beta. 1070 agar aa raha, you will be able to increase the quantity of product that you are able to buy. The central bank of our country as such beta, RBI, works primarily on the concept of inflation targeting. If you have learned economics somewhere as such beta, you see that the main aspect of your monetary policy is inflation targeting. We have an acceptable inflation rate of 4% plus or minus 2%. We do not have a fixed rate. We say that the long-term target should be 4%. Plus or minus 2% is acceptable. But we do not want it to be closer to 6%. We obviously want it closer to 4%. We do not want very less inflation. We do not want very high inflation. But the interest rates that prevail in any economy as such beta are primarily dependent on inflation rate. They said the other day there was a news article that RBI may delay reducing the interest rates. It was expected that this month mein beta they were going to reduce the interest rates by 0.25% at least. It would come down from 6.5% to 6.25%. But now there was an article owing to the current economic conditions, because the inflation is still very high in the country, RBI might delay reducing the interest rate to the month of Feb. Wherever there is inflation as such beta, remember higher inflation, there will be higher interest rates. Take a second beta, there should be another app. Just to show you how interest rates have changed as such guys. If you talk about a US 2-year rate guys, are you able to see the graph better? Utna clear nahi rahega, but then 2021 guys, the interest rates were closer to 0%. I'm talking about the US return guys. In US, the returns that you were fetching from securities in the year 2021 was almost closer to आ जाएगा बेटा वापस 5-10 मिनट में, बट ये इन्वर्टर पे चलता है, ये चलेगा. हाँ. So the returns guys were closer to 0%. What happened post that as such beta, on account of COVID, there were heavy economic benefits that were being rolled out as such beta. Government infused funds left, right and center. All across the world as such beta, the governments were infusing funds. That in turn triggered inflation. Because the inflation in US was very high as such beta, the interest rates went on to increase to 4%. ये 2-year का rate है बेटा. US में 4% is not normal. For them, short-term interest rates of 0.2-0.25% is normal. They've never seen interest rates at the level of 4%. See guys, when they take a housing loan as such beta, their interest rates were about 4%. Now their housing loan interest rates are also 6.5%, which is very high. When you have your deposits in a savings bank account there beta, you get only 0.25% interest. You do not get anything more than 0.25%. Now even those deposits are fetching them 4% because the short-term interest rates have increased. Everyone is expecting a reversal in this cycle now. Gradually now beta, you will see that these interest rates are going to reduce. What is the primary factor that they will consider? Inflation. As the inflation eases down as such, but as the inflation is reducing as such, guys, they will obviously have to अभी India 2 year का अगर देखो बेटा, 2021 it was about 4%. Now it is 6.8%. 2 year का rate. Why did we also increase interest rates as such, beta? Inflation in India was constantly on the rise. Because there was inflation as such, guys, we had to increase our interest rates. How does increasing interest rates help in curbing inflation? You are discouraging people from spending. The whole objective of increasing interest rates as such, guys, is that only. You discourage people as such, better from spending, but that never happened in Indian markets as such, guys. No matter how they've increased interest rates, the highest growing loan sector is household debt. People are buying cell phones, people are buying cars, people are buying everything left, right, and center using loans. Even if the interest rates are high in India as such, but it is not impacting household expenditure in any manner as such, guys. There was an article the other day which says 90% of the cars that are being sold in India as such, guys, are funded through loans. 70% of the premium cell phones being sold in India are under EMI schemes. This is household debt as such, guys. So the aim of the central bank as such, beta, is to curb. See, we also want growth. We also want people to spend, because only if they spend as such, beta, there will be economic job opportunities as such, guys. If people are not spending, imagine that your clients, beta, तुम्हारे firms के, do not want to spend. They want to reduce the amount of spending. क्या होगा बेटा? Will they still recruit so many people, or do you think they will start firing people? Audit में usually ऐसा नहीं होता है बेटा. Tax में नहीं होगा. Consultancy usually it happens, because consultancy is discretionary spending. Audit beta, anyways the entities will have to get their firms audited year after year. Tax, they will have to get the tax work done year after year as such, beta. But when it comes to consultancy, don't you think it is discretionary spending? Whenever there is recession, whenever profits are reducing as such, guys, the first field that loses out their jobs as such, beta, is the consultancy, because obviously organizations start reducing their spending on that as such, beta. Internal audit walo daro mat, haan. So anyways, guys, are we clear about this? So what I'm trying to tell you, beta, is higher the amount of inflation, higher will be the interest rates. RBI decides one rate, beta, called as repo rate. कभी सुने repo rate के बारे में? Yes or no? What is repo rate? Repo. Banks can borrow money from RBI as such, beta, subject to a certain limit of their net demand and time liabilities. They cannot borrow how much ever they want. There is a percentage of their net demand and time liabilities, 1% or 2%. Utna tak they can borrow from RBI. That is the rate as such, beta. It is called as repurchase rate. We will have questions on repo also later. It is called as repurchase rate because what banks have to do, beta, is when they are borrowing money from RBI, they will have to give government securities to them, and then they enter into an agreement that they will buy it back from them, from RBI. Imagine that I'm Bank A as such, guys. Bank A is transferring what to RBI? Government securities. Against that, RBI is giving you money. On a later date as such, guys, what will the RBI do, beta? Give you back your government securities, which you sold it to RBI, and you are going to repay the money to RBI. That is why it is called as repurchase rate, repo rate. Because basically what the bankers are doing as such, beta, is entering into a contract to buy back those securities on a later date from RBI. Today you are giving those securities to RBI, later you will buy it back. RBI has fixed the repo rate at present, beta, at 6.5%. Now imagine if banks are borrowing at 6.5% from RBI, don't you think they will be charging a little more than 6.5% on any loans that they are giving? So the primary rate, government does not decide interest rates, but the government decides indirectly only through RBI. Government cannot influence any of the long-term rates. Government will decide repo rate will decide short-term government security rates. Short-term government security rates in turn will decide your long-term government security rates. This is how the entire cycle of interest rates as such, guys, works. If this 6.5% is reduced to 6.25%, beta, what do you think will happen to government security rates also? अभी जो बताया बेटा, it was about 6.8%, उतना ही था ना, कुछ 6.7, 6.8%. 3 months government security rate was about 6.8. What do you think will happen to this? It also will most likely reduce by proportionate amount, beta. It might come down to 6.5 to 6.55%. If this is further reduced to 6%, beta, this will further reduce and it will come down to 6.25 to 6.3%. RBI keeps reducing the repo rate, short-term security rates will keep reducing. You are getting 7% on a bank fixed deposit only because repo rate is so high. If repo rate comes down to 4% as such, better, even your bank FDs will fetch only 4.5% or 5%. You are not going to fetch anything more. 2020 housing loan interest rates were 6.8%. Why were the housing rates 6.8%? Because back then repo rate was 4%. Now when the repo rate increased to 6.5%, housing interest rates are 8.3, 8.4% on a lower side. Depending on the credit profile as such, beta, they will charge. But at least bare minimum that you will have to shell out, beta, is 8.3, 8.4%. Everything is indirectly determined by repo rate. So this is the main tool of RBI, beta, to influence the interest rates that prevail in the market. समझ में आ रहा है नहीं आ रहा है? Yes or no? So whenever they say, beta, what is the risk-free rate? The answer is that risk-free rate is the government security rate. Government security rate is indirectly decided by whom? RBI. RBI fixes repo rate as such, guys. Based on that repo rate, all the interest rates as such, guys, will get fixed. Are we clear about this? Short-term security. Abhi beta, if you invest in any short-term security, you will generate a little more than 6.5%. Most likely around 7%. Even corporates, when they are borrowing, guys, they borrow about 7%, 7.2% for a shorter period. समझ में आया? Now, Japan as such, guys, do you think they will have higher interest rates or lower interest rates? For them, beta, interest rates were always in the range of 0 to 0.05%. Their long-term interest rates were 0.1%. If you were to take a term loan of 10 years as such, guys, in Japan, the interest rate that was levied by the bankers was 0.1% per annum. There were certain European countries with negative interest rate. You take a loan of 1 million to buy a house, you will end up repaying less than 1 million to repay the entire loan. I'm not kidding. There were abhi nahi hai beta, because there's higher inflation. Even every European country has short term. Even look at Bank of England also, guys. Even their short term interest rates have increased drastically as such, beta. It's about 5.75% or 6%. But they never had such high interest rates. Are you getting the point here? So developed countries will always have a lesser interest rate. What is the reason, guys? Huh, beta? Lesser inflation in developed countries. That is why they have lesser interest rates. Developing economies as such, beta, will obviously have a higher inflation. Higher inflation, beta, would result in a higher interest rate. That does not mean you keep increasing interest rate, beta. Jaise beech mein Pakistan mein bhi as such, beta, the inflation rate was very, very high. They increased short-term interest rates to 15, 16%. You cannot keep increasing more than that. But 15, 16% is also very, very high. It's no joke as such, beta. Russia में एक बार हुआ था बेटा, overnight they increased risk-free rates from 9% to 17%. This was when their currency tumbled by 50% overnight, the value of their currency. This is long back as such, beta, about 10 years back. But then things have happened like this. India is a relatively stable economy as such, guys. We will not come across those situations because we have $600 billion in foreign currency reserves. So these external events are not going to affect us so much. It might impact to a little extent, but not heavily, like increasing interest rates from 6% to 12% or all of that. So this is what you should know, beta, regarding risk-free rate. There's a doubt here. If repo rate decreases, inflation would increase. Then government security interest rate shouldn't increase. The objective, beta, is to ensure that you slowly decrease inflation. Objective of decreasing repo rate is not to pump up your inflation rate. It's in fact the other way around. As the inflation keeps decreasing, you will start reducing your repo rate. Remember that. So it will not have direct impact. And if the government security interest rates are increasing, the RBI will immediately start, if there is a higher inflation as such, beta, RBI will immediately start increasing repo rates also. Are we clear about this? Rachit, I hope the doubt is clear, beta. Objective is to rate. See, guys, there are many factors that come into play. Please understand, the wealth disparity in India has increased drastically. So even if interest rates are being increased, the spending power of the top 5%, top 7% is not getting impacted in any manner. As long as there is this reckless spending there as such, beta, inflation is going to remain. Second important factor, understand that Indian economy is heavily corrupted. Every state is such better, there is heavy amount of corruption. As long as there is corruption, there will be black money that is infused in land. As long as land rates are increasing, there will be higher inflation, because this has a ripple effect. Agar beta, if a land is worth 100 crores per acre, someone is opening a school of 5 acres, his land investment will be 500 crores. Shouldn't he expect an ROI of 7-8% at least? If he wants to make a profit of 40 crore rupees after recovering expenses, he should charge a fees of 10 lakh rupees per student. Otherwise, he will never make that return. Best way better to make money, sell the land, do not run a school. Invest that money in a fixed deposit, you will make much better return. Please understand, guys, everything has a ripple effect. If land rates are increasing, don't you think all the corporates will have to pay higher rentals? Yes or no? A rental of 100 rupees per SFT has become the new norm as such better in Gachibowli. It's very normal, 100 rupees per SFT. This area has a rental of 60-65 rupees for commercial segments. Obviously, the rentals have increased. A residential 3 BHK beta 2000 SFT in Gachibowli will cost you about 80,000 rupees per month as rent. When all of the other expenses are increasing, don't you think there should be higher inflation? Yes. So prima facie factor wo hai beta, but that cannot be targeted, because if that is targeted, then where will people put in their black money? So coming back as such beta, wo sab gyan baad mein. Ye samajh mein aa gaya abhi. So the short term interest rates are heavily influenced by repo rate. Are we clear about this factor? Now within an economy as such, guys, will you be expecting the same return from every security? No. Obviously beta, the return that you expect as such beta will differ. It will not remain same. Ab jaise there is something called as credit rating. Are we all aware of credit rating? To determine the credit worthiness of a company, guys, there is credit rating done. The highest rating is AAA, next comes AA, next comes A. Jैसे for individuals, we have credit score that ranges from 300 to 900. 900 being the top score as such beta, 300 being the least score there. Many banks will give a loan only if the credit score of that individual is more than 750. Few NBFCs give loans as such beta even if the credit score is more than 600. There are few NBFCs that give loans to individuals even if the credit scores are less than 600. Do you know what is the interest rate that they charge? 40% per annum. Why are they charging such high interest rates? The risk is very high. There is an NBFC based out of Hyderabad with a total asset under management, total advances of about 400 crore rupees. All of these advances have been given at an interest rate of 40%. The funda is very simple beta. These people are also taking very high amount of risk. Because they're taking a higher amount of risk as such, guys, they will obviously be expecting a higher return. So for individuals, there is credit score. Even the housing interest rate beta that is applicable to you will depend on your credit score. If it is more than 800, you get the best interest rate that is offered by the bank. If it is between 750 to 800, they will charge 0.2% more or 0.1% more. Very common. ठीक है? So वैसे ही बेटा जैसे we have the system of credit score for individuals, we have the system of credit rating, determining the credit worthiness, determining whether the companies will be able to repay back their debt on time or not. And this credit rating is also for different maturities. Not necessary that every entity beta should have the same outlook over a longer period. What if short term the company is very well placed, but long term there are major risk factors? Say the company's product as such beta is in the maturity phase. We are not questioning the cash flow generating capability of the firm over the next 1 year, 2 years. But what after that? Because the existing product is already in the matured stage. Kabhi na kabhi the sales will start declining. So isn't that a risk factor? So such entity beta can have a very high credit rating for the next 1-2 years, but can have a lower credit rating for a longer period. समझ में आ रहा नहीं आ रहा? So the credit ratings that we give beta AAA, AA, A, BBB, BB, B, and then directly D, default. There is no C category there. Indian credit rating system. International credit rating system works in a different nomenclature. Let us concentrate only on the Indian credit rating system as of now. If you are investing in a AAA rated company as such beta, are you taking a lesser amount of risk or are you taking a higher amount of risk? You are undoubtedly taking a lesser amount of risk. Should you be getting a higher return or should you be getting a lower return? You should be getting a lower return. This is a AAA rated beta, abhi October 2024, recent statement. On an average as such guys, AAA rated bond, different maturities है बेटा यहाँ पे, that is why the returns are different. Do not look at the word coupon, just look at the word yield. A AAA rated guys long duration bond is generating a return of 7.17%. Long duration bond. Long duration में why is the interest rate lower better for the time being? Because we are expecting interest rates to reduce over a longer period. It will not remain at these high levels. A short term bond as such beta has an interest rate of how much? Yield of 7.49%. This is a AAA rated bond. So if you invest in a debenture of a company as such beta that has a credit rating of AAA, you will be expecting these returns. If someone is offering you 12% beta on your investment, what does that mean? You are taking higher risk. There are few debentures of banks as such beta that give us an yield of 11%, 11.5% also. But when you look at that yield of 11%, 11.5%, please look at the credit rating of that bank also. If the credit rating of that bank as such beta is much lower, then obviously they will have to offer a higher return. समझ में आ रहा है नहीं आ रहा है guys? जैसे if I talk about a AA rated bond as such guys, look at the long duration interest rate beta. What is the yield that is prevailing? 9.04%. इसके पहले it was about 7.17, 7.2% beta. Here it is 9%. Are we clear? Why are we getting a higher return from this? There's a little higher risk compared to these companies do not default beta. At this age we can take that risk. First thing, we should not be investing in debentures, we should be investing in equity shares. Why do you want to invest in debentures at this that age beta? हमारी उम्र नहीं. But even if you're investing in a debenture as such beta, it's absolutely fine to put your money beta in AA rated bonds also, because it is not that the risk is way too high. When I talk about risk beta, the credit risk is what is important here. A A rated bond as such beta, long term bond, is fetching a return of 10.3%. Lesser the credit rating, higher will be the return. Higher the credit rating, lesser will be the return. If there are any debentures as such guys, there is an issue यहाँ पे बेटा, it's BBB rated. This BBB rated as such beta is offering, I'll just look at 60 months beta. For 60 months it is offering an yield of 13.24%. Why is the return higher here? The credit rating is also BBB. If you take a higher risk, obviously you will be expecting a higher return. So within an economy, you never expect the interest rates to be constant. You expect the interest rates to differ based on the credit risk that is involved. Are we very clear about this part? Yes or no? Wordings use karenge beta. In the questions, debt valuation, they will use wordings that a AAA rated security is generating 8%. A AA security should generate 1% more. A security should generate 2% more. You should be able to correlate with that. What are they talking about? What is AAA? What is AA? What is A here? समझ में आ गया? Now, are there only one security, but are there only debentures in which you can make your investments, or are there other instruments also? Just say you can make your money, but invest in preference shares, you can invest your money in equity shares. As an investor, where do you take higher amount of risk? I'll make you right also, don't worry guys. You're all looking at me कि ये सिर्फ बोलते जा रहा है. First 2-3 days, but it's all going to be like that. Abhi another half an hour or that, uske baad mein we'll start writing notes continuously. So that brings me to one important point, beta. You should be bringing 2 notebooks, guys. One will be a concept notebook. All the concepts you're going to write in only one notebook. It works wonders one day before the examination, guys. You do not have to go through pages and pages to revise as such, guys. That concept book itself will be 300 pages. Different story. But because you will have all the important concepts as such guys at one place, it will be useful to revise one day before the examination. The other book as such beta will be for your general notes. जो भी अपन question solve करेंगे, it will be in the other book. So carry 2 notebooks. You will not be needing the second notebook, that is a general notebook as such beta, for the first 2-3 days. After 2-3 days, you will be needing the second notebook also. You will be given materials most likely by Monday. I'm yet to change a few things as such beta in that. I'm working on it, so it might take another 1-2 days. Monday, कुछ फर्क नहीं पड़ेगा तुम्हारे क्या तो करना है वैसे भी. It's not like you're going to write the exam tomorrow. Anyone is writing in May 2025 here? May 25 बेटा. All right, अच्छा है बेटा. Revision की जरूरत ही नहीं पड़ती, क्लास में ही पढ़ लो. So back to this guys. When you're investing your money in debenture, when you're investing your money in equity share as such guys, are you taking the same amount of risk, or is the risk component different? Risk component is different. Where do you take a higher amount of risk? Why do you take a higher amount of risk when you put your money in equity share? Wherever your return is fixed as such, beta, you take a lesser return. Wherever your return is variable as such, guys, you take a higher risk. Equity shareholders return is variable. Yes or no? When I say variable, whatever is left over will be given to equity shareholders. Debenture holders get a fixed return. Irrespective of the profitability of the organization, irrespective of your yawning, the return that the debenture holders are going to generate will remain fixed. If a debenture is providing a coupon of 8% as such, beta, you will constantly get a coupon of 8% unless the company defaults. Equity share में ऐसा कुछ नहीं होता है बेटा. Higher the amount of profits made by the company, higher will be the return of the equity shareholders. Lesser the profit, lesser will be the return of the equity shareholders. So undoubtedly you take a higher risk when you're putting your money in equity shares. Should you be expecting the same amount of return from a debenture or from an equity share? No. You'll always obviously be expecting a lower return beta from debenture. You will be expecting a higher return from equity share. Because the risk component is higher when you're investing your money in equity shares. So at this age, beta, when we have that capacity to take risk, should you be investing your money in debentures or should you be investing your money in equity shares? Within equity shares also as such, beta, different categories of companies. Not every company has the same risk component. Jaise beta, the definition that is given by Mutual Fund Association, guys, market cap. You know what is market cap? The total market value of a company as such, but a number of shares multiplied by their market price is market capitalization. The top 100 companies in terms of market capitalization but are referred to as large cap. The next 150 companies in terms of market capitalization are referred to as mid cap. The remaining companies are referred to as small cap. In terms of market capitalization as such, guys, the top 100 companies will be large cap. Next 150 companies will be mid cap. Uske baad mein beta you will have small cap. There is a new word now, micro cap. These are the companies which have market capitalization between 50 crores to 500 crores. Now, when you're investing your money in a large cap, when you're investing your money in a mid cap, when you're investing your money in a small cap, the risk component is different. You undoubtedly take a higher amount of risk when you're investing your money in a small cap company. Larger the company, more financially stable it is. Lesser will be the chance of variability in profits. Smaller the company as such, higher would be the probability of variability. But it is these smaller organizations only as such that have a higher growth potential. Now, if you compare India with US as such, guys, which would be a smaller economy, which is a larger economy? Undoubtedly as such, guys, US is a larger economy as such, India is a smaller economy. Who has a higher growth potential? India has a higher growth potential. Likewise, when you're putting your money in large cap companies, small cap companies, remember these small cap companies as such have a higher growth potential. You tend to take a higher amount of risk in small caps, but you also tend to generate a higher return in a small cap. You want to take even higher risk as such, micro cap. Ajeeb chalta hai ye. Plus 50%, minus 50% is all normal for us, beta. That stock that I was telling you, that went up from 13 rupees to 100 rupees as such, guys, is a micro cap company. Total market value of that company now is only 150 crore rupees. So if you say 150 crores, isn't that a very small company? So the risk component is very high, but the returns are also very high. So within equity shares also as such, guys, you have these different classifications. You will be expecting a lesser return from a large cap company. You will be expecting a higher return from a small cap company. Now again at this age, if you were to invest your money directly as such, say you put your money in mutual funds, forget direct investments. Because direct investments, again, we will have to check which company is good and you cannot go by Instagram reels. Yes or no, beta? Majority of the stocks that you see on Instagram reels as such, guys, it is because they want to sell. And they want fools to buy. This is how it works, beta. Spread news in the market that this company is doing so well as such, beta. And that is why, if they want to sell, someone should buy, right? So they are creating this stream of investors as such, beta. And starting with, you will undoubtedly make money. Because they cannot offload the entire thing overnight as such, beta. For them to sell, it might take 5-6 months. Well, 5-6 months, my share price will still increase by 20%, 30%. We'll be very happy that we made a return of 20-30%. Uske baad mein comes that minus 90% fall. because then when you want to sell better, there'll be no buyer on the other side at all. But anyways, guys, so you take a higher amount of risk when you're investing in small cap as such beta. So at this age, you should definitely be investing in what? Small cap. For your age as such, guys, in fact beta, कभी children fund के बारे में, there's a mutual fund as such beta for children. You start investing as such beta at the age of 1 also for your kids as such, guys. Majority of those investments go into small cap companies. Why do they go into small cap companies? What is the time period after which you will be needing this money? Say if you start this investment when your kid is 1 year old, you'll be needing this money most likely when they're 18-year-old or 21-year-old. उसके पहले major education expense आएगा नहीं बेटा? Yes or no, guys? Schooling normally ऐसा ठीक है, आजकल schooling के लिए भी you will need that fund as such, guys, but otherwise you will need that money only when the kid is 18-year-old, 21-year-old. Isn't the time gap way too high? If you know mentally better that you're going to remain invested in the markets for 8 years, 10 years, there is no risk in small cap also. Risk कब रहता है बेटा? You want to invest today morning and exit tomorrow morning. I will invest 1,000 crores today. Tomorrow morning when I open, it should be 10,000 crores. Day after tomorrow when I open, it should be 1 lakh crores. It's not going to work like that as such better. Over a longer period, there is no risk as such, guys, provided your portfolio is well diversified. When I say well diversified as such beta, you're not parking your money only in one company. We have seen, guys, I've been investing from a very long time as such beta. I've seen much ups and downs as such, guys, in the portfolio. 2020 beta, my portfolio crashed by only 50% when there was COVID as such, guys. But then can you sit and cry in the corner कि beta 50% लुट गया, 50% लुट गया? This is the time wherein you're sure. If you're sure about the fundamentals, you bring in more capital into the markets. And that capital will remunerate. Last 3 years as such, guys, any stock that you have invested in would have given you 100% return. 100%, 200%, 300%. Tata Motors was trading at 140 rupees. Back then, guys. It is trading. It went up to a high of 1100. Even if you did not exit at that price as such, guys, even if I say remain invested in that, 780 is also a very good return. Isn't that still giving you a 500% return? Yes or no, guys? There was another company that was trading at 25 rupees better. Batteries making. It is now trading at a price of only 600. So that is like giving you a 3000% return, 4000% return as such, guys. But not every company. So see, well diversified portfolio agar hai, over a longer period, you are definitely going to make your returns. You are not risking your money. Risk comes when you are investing for a very short period. Are you getting the point here, guys? Yes or no? So from all of this, it is only one thing that we're trying to understand, that the required rate of return, the return that we're supposed to expect from any security should depend on what? The risk that we are undertaking. It depends on risk-free rate. It also depends on risk. Are we clear? Let's start writing something, guys. Write the heading, beta, basics of valuation. Basics of valuation. The value of any security. Notes mein beta. Write the heading as basics of valuation. So I'm assuming that this is going to be a concept book. Basics of valuation. So the value of any security. The value of any security or asset class. Value of any security or asset class will be based on the cash flows that are expected to be realized. The cash flows that are expected to be realized. Cash flows that are expected to be realized. Expected to be realized. And the required rate of return. And the required rate of return. And the required rate of return. The most commonly used method of valuation. The most commonly used method of valuation. Most commonly used method of valuation is discounted cash flow technique. Most commonly used method of valuation is discounted cash flow technique. Discounted cash flow technique, under which value will be equal to the present value of all the future cash flows. Present value of all the future cash flows. All the future cash flows. Next line. Valuation is considered as subjective. Valuation is considered as subjective. Valuation is considered as subjective. 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 As the cash flows are not certain. As the cash flows are not certain. As the cash flows are not certain. Next better. If an investor is optimistic, if an investor is optimistic about the future prospects of a company, about the future prospects of a company, about the future prospects of a company, he will place a higher value on the security. He will place a higher value on the security. He will place a higher value on the security. Next line. Even if the cash flows are certain, even if the cash flows are certain, even if the cash flows are certain, brackets में बेटा debt securities, there can always be a risk of default. There can always be a risk of default. Even if the cash flows are certain, there can always be a risk of default. Brackets में credit risk. In brackets, credit risk. Classic example beta, what happened with Adani debt securities guys 2 years back. After that report as such beta, everyone expected as such guys that there is something very wrong with the entire group of companies as such, but in the international market debt securities of Adani were trading at a discount of 20%. Just if the face value of the security is 100 rupees beta, it was available at only 80 rupees. Why were people placing a lesser value on the security? We expected that the company might default. Whoever bought securities at that price made an effective return of 20-25% even from debt security. But whoever is buying at that price also knows better that they're taking a risk. Even Sri Lankan government securities better were trading at a discount of 30% in the international market when there was so much news about bankruptcy. So whoever is buying those securities at that price as such better would obviously end up making a higher amount of return provided the company does not go bankrupt. The company actually goes bankrupt as such better, then kuch nahi milega. Always remember that. जैसे banks better sell their NPAs. In certain cases they sell NPAs, पता है ना बेटा, non-performing assets. So they sell their NPAs to asset reconstruction companies better. There are cases where NPAs are sold at only 15% of the receivable amount. Just if a bank has a receivable of 10,000 crore rupees, they sell it at 1500 crores. That's it. This is the amount that they realize. Asset reconstruction companies taking that risk. They buy the debt for 1500. They will try to turn around the company. If obviously better the company's operations come in line, they will realize a very high amount of return. But if they're not able to successfully do it, those 1500 crores also will go for a toss. That is the risk that they are taking. So obviously they'll be remunerated better by a very high return. Is that clear? क्या लिखे बेटा? Even if the cash flows are certain, there'll always be a risk of default, credit risk. Next. The two variables involved, the two variables involved in valuation are, the two variables involved in valuation are cash flows, ऐसा लिख लेना बेटा, point 1 cash flows and required rate of return. Cash flows and required rate of return. Cash flows and required rate of return. Next. Required rate of return. Required rate of return. Required rate of return. Required rate of return will depend on the risk-free rate prevailing in the economy, the risk-free rate prevailing in the economy, risk-free rate prevailing in the economy, and the risk premium, and the risk premium for the risk undertaken. Risk-free rate prevailing in the economy and the risk premium for the risk undertaken. For the risk undertaken. Next citing better, risk-free rate. Risk-free rate. The return generated on government securities, return generated on government securities is considered to be risk-free rate. Return generated on government securities is considered to be risk-free rate, as government is not expected to default. As government is not expected to default. As government is not expected to default. Next. The central bank of a country, central bank of a country decides the short-term interest rates, Central bank of a country decides the short-term interest rates, based on inflation. Short-term interest rates based on inflation. Higher the inflation, higher the inflation, higher will be the interest rate. Higher the inflation, higher will be the interest rates. Higher will be the interest rates. Now, at present, repo rate in India is 6.5%. 3 months government security rate is 6.8%. 10-year government security rate is about 7.2%. 10-year government security rate beta is 7.2%. Next line. USA with a lower inflation. USA with a lower inflation will have lower interest rates, will have lower interest rates, will have lower interest rate. The current 2-year short-term interest rate in US is, the current 2-year short-term interest rate in US is around 4.5%. Current 2-year short-term interest rate in US is around 4.5%. ये देखो बेटा जापान का yield 2019 is such beta it was negative, 2021 is such beta it was still closer to 0.1%, and then gradually as such beta now it is at 1%. Japan never believes as such guys in higher interest rates. Their interest rates are always closer to 0%, but then for them 1% is also substantially very high. जब बुलेट ट्रेन का प्रोजेक्ट आया था बेटा, remember that there was an announcement made, Japanese government is giving a loan to Indian government at an interest rate of 0.25%, and we were all wondering they're doing us a favor by giving us a loan at 0.25%. That were the interest rates as such guys that were prevailing there. In fact, 10-year interest rate back then it was only 0.1%. They gave us a 30-year loan beta at 0.25%. So that was at the prevailing interest rates only as such guys. It was not that there was a huge amount of subsidy involved there. Are we clear guys? Next beta. ये लिख लिए? लिखो. Within an economy, the interest rates will also depend on the risk involved in the security. Risk involved in the security. Risk involved in the security. Risk is determined. Risk is determined. Risk is determined using credit rating. Risk is determined using credit rating. Higher the credit rating, lesser will be the risk. Higher the credit rating, lesser will be the risk. Higher the credit rating, lesser will be the risk. Lesser will be the risk. Credit rating in India. Credit rating in India. Credit rating in India ranges as follows. Ranges as follows. क्या था बेटा? AAA, AA, triple B, double B, B, and then directly default. इसमें भी you will have outlook guys. जैसे AA plus रह सकता है, AA stable, AA minus. When I say AA stable, it means we are expecting that the credit rating of this company beta to remain in the category of AA. If I say AA positive outlook, though the present credit rating is AA as such beta, we also have a positive outlook that the credit rating is going to increase in the near future. If I say AA negative as such guys, though the current credit rating is AA, we have a negative outlook. It might fall down in the near future. So they will also have outlook as such guys. And remember, credit rating is not just for the entire company, it is for different instruments also. Because maturity matters. Short term maturity, long term maturity, beta credit rating is going to differ. Credit rating will not remain same. Now write on beta. The current yield on a AAA rated bond, the current yield on a AAA rated bond, current yield on a AAA rated bond is around 7.2%. 7.2%. AA rated bond has a yield of 9%. AA rated bond has a yield of 9%. AA rated bond has a yield of 9%. A rated bond has an yield of 10.3%. A rated bond has an yield of 10.3%. Next line. In comparison to a debt holder, in comparison to a debt holder, in comparison to a debt holder, the risk for an equity shareholder will be higher. The risk for an equity shareholder will be higher. The risk for equity shareholder will be higher as the return is variable. As the return is variable. As the return is variable. Based on market capitalization. Based on market capitalization. Listed entities are segregated as. Listed entities are segregated as. So, large cap companies. This will be what better? The top 100. Mid cap companies. Next 150. Small cap companies better. The balance. Large cap companies, mid cap companies, and then small cap companies. Micro cap क्या बोला था बेटा मैं? Between 50 to 100 crores. 500 crores बेटा, sorry. Market cap बेटा between 50 crores to 500 crores. Micro cap companies have a market cap of 50 to 500 crores. We have mutual funds better that invest in micro cap companies also. The returns are usually very higher, but do not forget the risk is also very high. Are we clear about this, guys? Yes or no? Right on. Next. Large cap companies are financially more stable. Large cap companies are financially more stable. Large cap companies are financially more stable, and hence the risk is comparatively lower. Large cap companies are financially more stable, and hence the risk is comparatively lower. The risk is comparatively lower. The risk will be the highest for small cap companies. Risk will be the highest for small cap companies. Risk will be the highest for small cap companies, and hence the expected return is also higher. The expected return is also higher. Expected return is also higher. Small cap ना बेटा, every 5-6 years you will always see a crash. मतलब नॉर्मल क्रैश आता 50% एरोड करेगा जाएगा, बट वापस बेटा दे विल स्टार्ट शूटिंग अप. जैसे 2018 वी हैड द वर्स्ट स्मॉल कैप क्रैश. मेजॉरिटी ऑफ द कंपनीज डिक्लाइन बाय 60-70%. अभी बेटा we've already seen a correction of about 30% in small cap companies the last 1.5 months. Though the broader market did not decrease, small cap companies have almost declined by 30% as beta, pretty normal. But then usually these corrections come better, but then in between those correction phases also they end up giving such high returns that these corrections may not matter much as such, guys, over a longer period. That is why we say that whenever you're investing in a small cap entity as such better, your period of investment should be 8 to 10 years at least, so that even if a correction comes as such, guys, there'll be other periods that will compensate for that correction. All right, so लिख लिया बेटा, risk is comparatively higher for a small cap company and hence the expected return is also higher. Now when I talk about valuation as such guys, always remember there are two factors as such guys that drive valuation. One is the craze about that security in the market as such beta, which is influencing demand and supply. The other one is fundamentals that affect valuation over a longer period. Over a shorter period as such guys, the price of any security for that matter as such beta is majorly driven only by demand and supply factors. Higher the demand for any security, higher will be the price. Higher the supply for any security as such beta, lower will be the price. अभी जैसे बीच में क्रेज आ गया था बेटा that everyone says buy silver, buy silver, buy silver as such guys. The price of silver as such beta went up from 70,000 to a lakh rupees. Last week we saw correction after Trump won the elections as such beta. Trump जीतेगी, we expect that there will be global this thing beta, at least safety as such. Countries waging war against each other will reduce. So if that uncertainty reduces, people will not go back to commodity. Whenever there is uncertainty in global market beta, people fall back on commodities. This is where they start buying gold, they start buying silver. This increases the demand of gold and silver. This in turn increases the price of gold and silver. If there is lesser uncertainty as such beta, people will not shift to gold and silver. But then remember, even now beta, people say that in the next 3 years, in the next 5 years as such beta, silver is expected to touch 3 lakh rupees. Just seeing that as a comparison with gold price. It says historically the average of gold and silver always was about 15:1. That means if the price of gold is 15, price of silver is supposed to be 1. Now the ratio beta is 80:1. If the price of gold is 80 rupees, price of silver as such beta is 1 rupee. So this average as such beta does not make sense, and then silver is also being consumed in other things. But then remember, these are all perspectives as such guys. No single individual will determine what is going to happen as such beta over a longer period. What I'm trying to tell you beta, if there is demand, there is also going to be a higher price. जैसे ही Trump जीता as such beta, the shares of Tesla increased by 10%, 20% overnight as such beta. Do you really think fundamentals changed overnight? Fundamentals did not change overnight. It's like this beta. What Adani has become in India as such beta, Tesla has become in US. The minute BJP wins an election as such guys, the shares of Adani increase by 15%, 20% here. Why? People expect as such beta that there will be more favorable economic policies toward these groups. सबके सब गवर्नमेंट्स मिले सर बेटा, that's a different story because see, Congress complains that Adanis are favorites of BJP as such बेटा. हैदराबाद का कॉन्ट्रैक्ट किसको जाता? Adani. Power collection as such guys, entire power collection contract of Hyderabad beta has been given to Adani. Current government, Congress government has given it. What is the share that they're offering them? 25% of the amount collected. Whatever electricity bills are being collected, because our collection in Old City as such beta has been very less. So they say we will not be able to collect anything. Give it off to them. They will collect the amount. Whatever they're collecting, 25% tumhara, 75% hamara. Isn't that a way too high commission to be offered? So but anyways guys, coming back to this, I was talking about what beta? Demand and supply affecting prices. Abhi cryptocurrencies, did the price increase as such guys? Heavily as such beta. See, I am not an advocate of cryptocurrency. I do not believe in cryptocurrency as such beta. Because what is the underlying there? It is just an artificial technical instrument that you've created as such guys. There is demand. It's like this, but I'll carry a bag of sand as such beta and give it to you and say that this has huge value. As long as people are believing that, as long as there are buyers and sellers as such guys, don't you think the value of that will keep increasing? The day someone realizes that this is useless as such guys, there is absolutely no value, that is the day as such beta that the prices will start crashing. What if suddenly as such beta they find a huge mine of gold as such beta where there is unlimited supply of gold? What do you think will happen to the prices of gold? It will crash down heavily as such beta. It might not go below the cost of mining as such guys, but then it will at least come to the cost of mining plus some profit element there. Because mine करने में भी तो खर्चा रहेगा. So what is happening here? The supply has increased drastically as such beta. Because the supply has increased, the prices will come down. So always remember, over a shorter period as such guys, it is always demand and supply that drives the prices. Over a longer period as such beta, it is fundamentals that will drive the price. Over a longer period. When we say stocks are artificially rigged as such guys, this is what is creating artificial demand and artificial supply. Companies beta whose market capitalization is 100 crores, don't you think beta if 5 friends collectively arrange for 20 crores, they will be able to manipulate the price of this stock entirely? तुम ही खरीदते बेचते बेटा. You're buying from one system, you're selling in the other system. If the price is 100 rupees, you will place a buy order for 101, someone else will sell for 101, अपने ही group वाले. Then you will place a buy order for 102, बाजू वाला will sell for 102. You will place a buy order for 103, बाजू वाला बेटा will sell for 103. You keep increasing the prices साथ बेटा, and then you start attracting people. They will enter बीच में and they will keep buying. You do not mind because your objective was to sell it to them. This is artificially rigging the stocks as such, guys. That is why we always go by promoters holding also. So this company that I was talking about has a promoters holding of 26% only. Public holding 74%. Guys, promoters holding, if it is closer to 75%, no, very good. Exceptionally great is that beta, because that is the minimum norm of SEBI. Minimum 25% should be offloaded. If not immediately, over the next 3 years. That is the rule. So maximum promoters holding for listed entities will only be 75%. Very large entities cannot have 75% promoters holding because they need to depend on capital. Just if you talk about Reliance Industries, it is 50%. 50.2, 50.3%. If the promoters holding is 25, 26%, beta, then there's something very wrong with the entity. They are selling all the shares. In fact, all the operators will be the friends of promoters only. They are only giving shares so that they artificially increase the price of beta and then start manipulating it. So demand and supply will affect valuation over a shorter period. Over a longer period, it is always fundamentals. If you believe in a stock as beta, the temporary price changes should not affect your decisions. Are we clear about this? Write this also better. Over a shorter period. शक्लें देखो तुम्हारी, कितने दिन बाद में उठ रहे बेटा जल्दी? After ages, no sir. We get up at 9:30 every day. Yes, guys, get used to it better. And then also remember, you're not coming here to sleep. If you are coming here, effectively utilize the time, or else do not come better. Why do you want to disturb your sleep? At least sleep properly or study properly. दोनों में से बेटा, ये आधा करेंगे वो आधा करेंगे. We are looking here and there. अभी भी 8:10 ही हो रही, तब से बात करते जा रहा ये. He's not stopping only. Oh my God. AC बंद है बेटा वो. Only that one is on. तो तब से डांस कर रही है यहाँ पे बैठ के. Yes. What was I talking about बेटा? हाँ. Over a shorter period. Over a shorter period. Over a shorter period. The demand and supply. The demand and supply will influence price. Will influence price. Over a longer period. Over a longer period. Over a longer period. क्या पी रहा हूँ? ऐसे ग्रीन टी बेटा पिएगा? मैं ही पी लूँ ना? ईरानी चाय. So, what was I talking about beta? Over a longer period, the fundamentals of a company will determine value. Over a longer period, the fundamentals of a company will determine value. क्या हुआ याशा? Wrong लिखी कुछ? Will determine value. ये हो गया बेटा basics about required rate of return. Are we all very clear about the word required rate of return, guys? We were clear about it before also, sir. आप ही बात कर रहे थे तब से. We have something called as nominal return and real return. All of these are basics that we will be using in multiple chapters, guys. Moving on to the next concept beta, that is nominal return and real return. Now, do we know what is nominal return and real return, guys? Yes. Yes, sir. तू टाइम पास कर रहा है यार. चले आ गया next. My God. ये देखो. हाँ नजर लग. तू बिलीव करता होगा बेटा. तू सुबह सुबह टीका भी लगा के आया. Yes, guys. ज्यादा भर दिया बेटा गलती से. Now, nominal return and real return. अरे you just said I know about it, huh? Excellent. Nominal return, guys, is after considering the impact of inflation. Real return beta is by eliminating the impact of inflation. I just gave you an example with a couple of minutes back that if the inflation rate prevailing in an economy is 6%, should you be generating less than 6% or should you be generating more than 6%? You should be generating more than 6% as such, guys. Only then you will be able to maintain your standard of living. Yes or no, guys? If you're generating anything less than 6% as such, beta, you will not be able to maintain the standard of living. Purchasing power, beta, will not remain same. So the excess return that you generate over and above your inflation is called as your real return. All right, Sairam. The excess return that we are generating, guys, over and above our inflation rate is called as your real return. If the return that you are generating is 8%, inflation rate is 6%, better, how much should be your real return? 2%. We do not write like this, but abhi ke liye aise samjho. There's another equation that I will have to give you. But as of now, whatever excess return that you are generating over the inflation rate will be real return. Now, do not forget, whatever interest rates that prevail as such, beta, in the outside market are all nominal returns. If you create an FD with a bank as such, guys, and they're offering you an interest of say 7.5%, will that 7.5% be nominal return or real return? They will not tell you at the end of the year that we will give you 6% more for inflation. Isn't that the entire return that you're generating? That 7.5% should compensate for inflation, should compensate better for the excess return also. Are we clear about this, guys? Now, say there is a product as such, better, just to explain the relation, guys. In the year 2023 as such, better, the total quantity of the product was 1000 kgs. The price of that product as such, better, is 100 rupees. What is the total value? Huh? बोलो ना यार, ऐसे ही सो जाओगे वरना. 1 lakh. 2024 better, the total quantity as such, guys, is 1050 kgs. The price of that as such, better, is 110. What is the total value? 1,15,500. Yeah, backers wala hai beta. 1 lakh in 2023, 1,15,500 in 2024. What is the total return, guys? Percentage increase. Abacus. उसमें percentages आते हैं. Yes, beta. 15,500 divided by 1 lakh. There's an increase of 15.5%. What is the percentage increase in price, beta? 100 rupees has become 110. For this, you do not need abacus skills, beta. It is an increase of 10%. 1000 has become, guys, 1050 kgs. What is the percentage increase? 5%. Excellent. There is a 5% increase in quantity. There's a 10% increase in price, resulting in a 15.5% increase in value. Yes or no? If I were to establish a relation between this 5%, 10% and 15.5%, it is 1 plus 15.5% equals 1 plus 5% into 1 plus 10%. It is not 5% plus 10% is equal to 15.5%. In other words, beta, that 10% price increase is also on increase in quantity. Yes or no? Price is increasing by 10%. That is not just for the previous year's quantity. Isn't that for the extra 50 kgs also? So, jo price increase ho raha hai, beta, that is for both quantity increase as well. If you multiply, beta, 1 plus 0.05 into 1 plus 0.1, you will get same answer, 1.155. समझ में आ रहा है क्या बोल रहा हूँ? Yes or no? This is the exact relation between nominal return and real return. 1 plus nominal return is equal to 1 plus real return into 1 plus inflation. It is not nominal is equal to real plus inflation. I know that in foundation I taught you better that nominal is equal to real plus inflation, because back then also I gave this relation and I told you this is the exact relation, but then we cannot help it. Apne syllabus mein this is the portion. We have to write nominal is equal to real plus inflation. But the exact relation better is this. CA final syllabus mein we cannot write nominal is equal to real plus inflation. We will have to write 1 plus nominal is equal to 1 plus real return into 1 plus inflation. Our inflation is price increase. Wasn't that 10%? Total increase in value including price increase was 15.5%. The real increase beta was only 5%. This is how you also deflate nominal GDP into real GDP, जो भी पढ़ते हो बेटा economics में. Isn't that the same concept? Nominal GDP is current year prices, real GDP is at base year prices. If you remove the impact of inflation from nominal GDP, you will get real GDP. समझ में आ रहा है? So what's the relation between nominal and real return, beta? 1 plus nominal return will be equal to 1 plus real return into 1 plus inflation. We will come across all of these points, beta. We will have advanced capital budgeting बोल के एक chapter है. वहाँ पे will have capital budgeting with inflation. Few questions we might have to discount at real rate, few questions we might have to discount at nominal rate, depending on the requirement of the question. Foreign currency management है, वहाँ पे भी they will ask us to do home currency approach and foreign currency approach. So you will have risk. नहीं उसको जाना था बेटा, permission पहले ही लिया, नहीं जाने दूंगा, not allowed. क्या हो जाएगा नहीं गया तो? एब्सेंट ही तो मार्क होगा ना यार. मेरी क्लासेस कितने बार मिस करा था तू? कभी सोचा है? कभी नहीं करा आज तक. फेंक रहा है तू. कभी नहीं करा ये. तेरे को भी जाना है इसके साथ. कहाँ जा रहे हो तुम लोग? ट्रेनिंग है पक्का ना बेटा? डेट पे नहीं जा रहे हो ना सुबह सुबह? ऑफिस ओनली, ऑफिस डेट. ऑल राइट बेटा, बाय. साई राम, सॉरी बेटा. Yes, guys. Aja. So understood what is nominal return and real return, guys. Let's write better siding. साईराम गुस्से में मत देख उसको, उसका ऑफिस का दोस्त है वो. Write the siding, guys. Nominal return and real return. Nominal return and real return. This is the very first time, guys, that in the first day I'm taking a class of 1 hour 40 minutes already. Usually first day I do not take a longer session, I leave early, but then now because the flow is continuing, we'll continue with our arms. Why waste time? Nominal return and real return. Write down. Nominal return is inclusive of the inflation component. Nominal return is inclusive of the inflation component. Inclusive of the inflation component. Real return is the excess return generated. Real return is the excess return generated. Excess return generated over and above the inflation rate. Over and above the inflation rate. Over and above the inflation rate. If the interest rate is 10%, if the inflation rate is, interest rate is 10% and the inflation rate is 6%, if the interest rate is 10% and the inflation rate is 6%, purchasing power will not increase by 10%. Purchasing power will not increase by 10% as the prices itself are increasing by, as the prices itself are increasing by kitna beta? 6%. As the prices itself are increasing by 6%. 6%. Write this as the example beta. 2023-24 quantity, price and value. So 1 plus 0.155 is equal to 1 plus 0.05 into 1 plus 0.1. The entire part, beta. 1 plus nominal return is equal to 1 plus real return into 1 plus inflation rate. So that's 1 plus 0.155 is equal to 1 plus 0.05 into 1 plus 0.1. So if they ask us to compute, guys, real return, and they give like this, that the interest rate is such, beta, is 8%, inflation rate is 6%, how are you going to get your real return? If they give us like this, beta, interest rate is 8%, inflation rate is 6%. Always remember, beta, prevailing interest rates are always nominal rates. Prevailing interest rates are always nominal rates. So if an example is given like this, beta, what will you write, guys? 1 plus 0.08 is equal to 1 plus 0.06, that's the inflation, into 1 plus real return. Real return is what is missing here, guys. How much will that be, beta? 1.08 divided by 1.06 minus 1, 1.89. 1.0189 आया होगा बेटा. So 1 plus real return is 1.0189. That means real return is equal to 1.89%. 0.0189, that is 1.89%. Are we clear about this, guys? Yes or no? So the only thing that we have learned about Asad Beta today is what so far is that the basics of valuation, guys. Value of a security will always depend on the present value of future cash flow. So for that there are two things. One is cash flow, the other one is required rate of return. We are not concentrating on the part of cash flow as of now. We are only talking about required rate of return. The required rate of return of any security depends on risk-free rate and the risk premium, guys. Risk-free rate is nothing but the return that you generate from government securities. Risk premium will depend on the risk that you are undertaking, measured by credit rating. Higher the amount of risk, higher should be the risk premium. Lesser the amount of risk, lesser should be your risk premium. I've shown you about the yields that we are getting on a AAA rated bond, AA rated bond, and an A rated bond. In comparison to debt securities, we take a higher amount of risk when we are investing our money in equity shares. That is why you will in turn be expecting a higher amount of return beta from equity in comparison to debt again. And then we did the concept of nominal return and real return. Nominal return inclusive of inflation, real return beta is excluding inflation. If you remove the impact of inflation from your real return, from your nominal return, you will arrive at real return. Are we clear about this? Chalo guys, I'm ending the session a little early better today. From tomorrow, full time, proper. We'll be doing same time value of money only, guys. अभी कहाँ जाना है बोल के अगर सोच रहे हो तो बेटा, the many breakfast places around. Happily go around, have fun. ठीक है? They open at 7 in the morning only. चलो. Online students, I'm ending the session better today. I'll start at 6:30. A message will be sent in the chat, in the group better as and when I start the class. Bye bye. See you guys tomorrow.